Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. If you're being denied for credit and you thought if they only just gave me one chance, I could prove myself, then you're not alone. I've definitely been there. Just a few years ago, my credit score was a 426 and I could not get approved for anything. Now, fast forward a few years later, after some various disputes and some really smart strategies, as well as some accounts that I actually used to build my credit, I'm currently at an 825 credit score. Now, if your credit score is in the rebuilding phase, lenders aren't exactly lining up to hand you money. But today, I'm going to show you how to get $58,000 in primary trade lines, and this will be guaranteed approval. And today, one particular trade line will actually give you something that the rest of them can't, and that is going to be your credit age. You'll be able to add 2 years onto your credit history, as well as getting 24 months of on-time payments instantly. As some of you will know, on-time payments is 35% of your overall score, and having a credit age that's at least 2 years definitely gets you approved for more products. I've spoken about all of these trade lines before, but now you'll have one extensive compilation where you can simply jump through each of the timestamps and sign up for the accounts that you like the most. Now, I'm going to break them down into how they equate to $58,000. And once again, go through the timestamps if you want a more in-depth review about each of these accounts. And without further ado, let's get right into the video. Now, the first account that I'm going to start with is the Magnum XL, and that's going to be an installment credit builder loan that you can get up to $30,000. Now, I have an entire video where I talk about the Magnum XL in great detail. So if you want to know my experience with that, I did have this loan. I definitely break it down in a very comprehensive way. And if you guys want to get that before you decide to get that, definitely watch that video. Now, this is a credit strong product, so you'll find everything on their website, and you'll find that for these first 3 products. When it comes to credit strong, you can actually have up to 2 installment loan accounts, 2 revolving accounts, and 2 business accounts at the same time. So I suggest maybe trying one first and see how you like the product before adding multiple. Next, let's talk about Revolv. This is an installment account, also again with Credit Strong, and with Revolv Pro, you can get up to $10,000 in a credit line to report. Now, again, all links will be in the description with full reviews and the available timestamps. Then we have the Instal and the CS Max. These are credit builder installment loans that are designed to help strengthen your credit profile. And with the CS Max option, you can have up to $10,000 in credit line reporting. After that, we have Ava. Now with Ava, you can actually get a $2,500 revolving line of credit, as well as an installment loan for $300 for a total of $2,800. I've done various videos on Ava throughout the years, so if you guys want to watch that, I'll put my latest video up, which should still be relevant to date. Then we have Kikoff, which is another credit builder loan that most of you will probably be familiar with. Now, you can get up to $3,500. This is not offered to everyone in the beginning. Sometimes you have to wait until the offer is available in your account. Kikoff also has an installment loan that's $120, and that's going to be a total of $3,620. Now, once again, sometimes these things change. Sometimes products are added, sometimes products are taken away. So if it does change, you may want to go to the website and make sure all the information is relevant. But I did check it recently and everything was still the same. So that video will also be in the description below if you want to check that out. Next up, we have Ryezing.com. I've been talking about Ryezing in almost all of my videos. Now, Ryezing is going to be the most important credit builder on this list. Ryezing is a platform that helps you by giving access to your credit report, your scores. It shows you what's hurting your credit report. That way you can take action through tools like custom dispute templates and bureau response tracking. And I've already seen it myself. Very shortly, if it's not already available, you'll actually be able to send your disputes through the Ryezing app. However, the main reason that Ryezing is on this list is because it offers rent and utility reporting features, which does allow you to build positive history instantly. And not only does it allow you to build positive payment history instantly, you can backdate your rental and utility reporting for 24 months. Now, this is something where a lot of people, they probably don't realize the significance of this. You can actually add 2 years to your credit age instantly. For someone who's rebuilding credit or who's brand new to credit, I don't think they realize how that will greatly affect your credit score. 35% of your overall FICO credit score is on-time payments, right? That is the largest factor that will affect your credit, and FICO is also used by 90% of lenders. When you add 24 months of history to your credit report, you are instantly, you don't have to wait. That's the one thing that's different about all of these. All of these other ones, you have to actually wait months and months and months in order for the history to report. With this account, you instantly get 2 years of history added onto your credit report. The one other thing that's great about this account, unlike every other credit builder on this list, it will never report negative history. You will never have any derogatory information. I've actually been getting comments from people that have been asking me about how to remove late payments from like Ava and Kikoff and some of these other places, like Self as well. It's very difficult because they understand exactly how reporting works and they stay on top of it. With something like Ryezing, you'll never have that problem. It will never report negative information. The national average for rent in the US is approximately $1,750 per month. That is the average prices that generally sit between $1,643 for a 1-bedroom and $1,907 for a 2-bedroom apartment, depending on the exact unit size and of course the location that you are currently in today. That is the reason why I put $1,750 for how much this could potentially report. Again, it'll report your rent. So if your rent is $2,000, $3,000, this might look like a $3,000 installment type loan. So again, that can be greatly beneficial. And Ryezing also includes personalized credit game plans, score and goal tracking, educational tools, and guidance on products like secured cards and credit builder loans like the ones we're discussing today. And right now you can get access to your credit reports for $1 through Ryezing's 7-day trial. And last, we have Kovo, and this will be an installment line of credit that is $240. Now, if we take the total amount of all of these, it gets you somewhere around the $56,660 mark. For Ryezing, I left that one out simply because it varies depending on exactly what your rent will be. And also you can report utility payments, so that'll also change things around a bit. However, for most of you, this will be $58,000 in credit builders where you have guaranteed approval and you can actually boost your credit score fairly quickly. All right, I want to thank you guys so much for watching this video. If you have any experience with any of these credit builders, please drop that in the comments below. I would love to hear about how they've helped you or how they've grown your credit score. For me, I've used almost all of these products, right? Like I've had them all on my credit report. I've tried them and a lot of them have helped me actually build my credit. And to this date, I still have a few of them on my credit report. Now, currently I am using Ryezing to monitor my credit. I'm actually using that to dispute some other information that I'll be showing in some other various videos. So once again, if you have any issues where you have collections, charge-offs, late payments, check out Ryezing, but also use that credit builder feature. It's not just for disputing information on your credit report, it's also used to help you build credit as well. And if you guys have any additional questions that may not have been answered in the videos, or if you know some updates or changes that have happened and you want to put that in the comments below with any of these credit builder options, please do so. I love when you guys share that information. We make corrections, updates, nothing wrong with that. Videos get outdated, things just happen, things are missed or overlooked. And as always, I want to thank you guys so much for watching this video. I truly appreciate it, and you guys have a wonderful day. Welcome back to Success with Steven. My name is Steven Smith. On this channel, we talk about all things financial literacy. And today we're going to be talking about a $30,000 trade line that you can get. And this is going to be with Magnum. It's a credit strong product. If you're familiar with their products, they do have a lot of credit builder type loans and other things that you can use to boost your credit score with no credit check whatsoever. Now, I've personally used this and it was requested by me to cover this. And I'm going to give you my personal opinion on it, and then make a recommendation who I think would benefit from this product and if it's something that you can use today to boost your credit score in order to get you qualified for loans, credit cards, and other products as well. So without further ado, let's get right into the video. Now, Magnum is just one of Credit Strong's products. It's backed by Austin Bank. They offer 3 credit builder loans that aim to boost clients' credit scores and unlock the benefits of doing so, such as better interest rates when it comes to personal loans and auto loans. It can also increase the chance of you qualifying for business credit cards. Credit Strong's Magnum installment loan increases an account holder's credit score by an average of 86 points, and that just depends on exactly where you're starting from. I'm going to give you a table that will actually show you what credit score range you can expect and what increase you should get with that credit score range. Now, they do have very low monthly payments starting at just $30, but then from there, it does go up quite a bit. And it's the best credit builder loan for people who have a lot of cash, but maybe have very thin credit profiles and they want to do something to give them some larger credit lines. Like most other secured loans, there is no money that's due up front. It's secured. No cash up front. Once you sign up for the loan, it's originated by Austin Capital Bank. And what that means is they create the loan with a certain amount and then it's locked in a savings account. This allows them to offer at a locked interest rate with no credit check. And as you make monthly payments, they report your activity to the bureaus. That will strengthen your credit profile. And since the loan is secure, there's no obligation to repay the full amount. You can cancel once your particular goals are met, which is something that I did, and I'm going to be going over exactly how I did that. Now, when you want to apply for the loan, you go to Magnum's website, choose whichever one fits within your budget or your range, and then you'll get the funds originated by Austin Capital Bank. It's placed in a locked savings account, so obviously you don't have access to it at all, but you're going to make monthly payments towards that balance. And that balance will be reported every single month, and it's going to show a decrease. Every time you make a payment, it'll be decreased. That activity gets reported to the credit bureaus monthly. That helps you build credit history. Now, there's 2 ways that you can pretty much end this loan. The first one will be you either let it pay off until the end of the term, or you have the option to close it early. When you close it early, they pay off the remaining balance of the secured loan funds, and then you get your principal portion returned to you. Now, the principal will be whatever you pay monthly minus whatever the interest rate was, okay? And again, I'm going to give you some examples of what that looks like and how much it'll actually cost you in order to get this secured loan. So currently we're on the website for Magnum, and I want to go here to kind of show you what the setup is, exactly what they're offering at the time of recording, and then take a look at some tables to show you how much it'll actually cost you. So Magnum helps you build a large amount of credit with low monthly payments, and you can build $2,000 to $30,000 of credit history starting at just $30 a month. And Magnum credit equals maximum impact, 86 points average FICO score increase. Now that's what they're saying is the average credit score improvement for Magnum account holders that made 12 on-time payments. But I do want you to check out this table right here because it's showing you the lower your credit score is, the more improvement that you see. So if you were to have a 550 credit score and you did the Magnum 5000, it may increase your credit score by an average of 77 points. If you had a 550 credit score, then the Magnum 10,000 may increase your credit score by 86 points. So just keep that in mind. The most improvement comes from the lowest score. So you're not just going to get 86 points if you're at, let's say, a 700, and then 600. 51 for the Magnum 5000. If you're at the Magnum 10,000, maybe a 60 point increase after 12 months. 650, 37 at 5,000, and then the Magnum 10,000, 43 points. And then 700 would be the probably like the highest. I would say if you're at a 700 range, you probably don't need this, but if you were, you may be getting 32 points for the Magnum 5000, and for the Magnum 10,000, you would be getting 33 points on average after 12 months. Now, the pricing, once again, they said starts at $30, but that is the minimum monthly payment. So it's going to be $30 for the $2,000 Magnum credit builder loan, $60 for $5,000, $125 per month for $10,000. Then there is the Magnum XL. The Magnum XL is the larger limits. For $175 a month, you're going to have $15,000 in this credit line, or for $350 per month, you can get the maximum, which would be $30,000. Now, Magnum says that they recommend you paying 2 times the minimum required monthly payment, and that's just going to speed up the process in order for you to see a higher increase in your credit score. So it says all Magnum accounts have a $25 non-refundable administrative fee. So for complete plan details and interest rates, then you can click here and you can check it on the website. And Magnum accounts have no prepayment or early withdrawal penalties. So again, you can cancel this anytime that you would like. So you can pay any amount over the minimum required monthly payment or cancel at any time for any reason with no penalty whatsoever. Magnum also goes over on the website how these accounts maximize your credit profile by adding a large credit account. And that does help to an extent, but again, I'll go over my own personal opinion of this at the very end. But not everyone needs a Magnum sized account, but they may be right for you if you want to unlock higher credit card limits, if you want to access higher value personal loans, if you want to maximize your potential credit score and get a higher credit score increase. And then the Magnum XL accounts are the largest and the longest credit builders that are in the nation. So I believe you can do this for up to 120 months, which is very, very, very long. I think that's going to be like 10 years. So Magnum XL accounts are for individuals wanting to maximize the amount of credit on their profile. Magnum XL may be right for you. Number one, if you had or you have a credit card or personal loan in the past with a good payment history and want higher credit card limits, larger loan amounts, or lower interest rates. If you are new to the US and want to establish a US credit profile with a larger amount of credit, and if you want a sizable personal credit history for business purposes as a sole proprietor. And Magnum XL accounts are not recommended if you have limited financial resources and are just starting to build credit, if you are trying to obtain your very first credit card or personal loan, if you have many recent negative items on your credit report, such as multiple late payments or missed payments, bankruptcy, or collections. And if you're just starting to build your credit and have limited financial resources, Magnum 2000, 5000, and or Credit Strong Revolv may be a better option for you. Now, the reason why I kind of want to cover this and talk about this, I'm glad that they put this here, is because the Magnum XL is really meant for someone who wants to have a higher credit line on their credit report so they can get larger limits. This is something that I've talked about throughout a lot of my videos, but when you get approved for, let's say, business credit cards are likely to approve you for what they see you have on the personal side. That includes loans. So let's say you've only had like the Ava credit builder loans where maybe it's only like $500, something small, it's just a tiny one. The chance of you being able to get like a $30,000 personal loan is very unlikely. But if you have something like Magnum XL and you have a $30,000 personal loan with them, when you go to apply for another personal loan, you're more likely to actually get that. Same thing when it comes to credit cards, same thing when it comes to other types of accounts, even auto loans, lower interest rates. So if you're looking at doing something like that, then it might be able to help you. What this is not going to do is give you higher credit limits if you have collections, if you have a bankruptcy, if you have late payments. It's not going to really help with that. If you're trying to do something like get a mortgage loan, it will not help with that. What it will help with is maybe getting a lower interest rate on maybe a personal loan, a lower interest rate on an auto loan, help improve your credit score, like a quick boost, and just to show that you can handle larger credit lines. Those are the things that you'll get when you use Magnum XL. Here's another thing. Magnum is optimized to build large amounts of credit with a low monthly payment. Magnum is not optimized for saving, so that's what we're going to go over next. Now, what is an installment credit builder account? It is a cash secured credit builder loan where you do not receive the loan proceeds when the loan is originated. You don't get this in like money that you can actually use. It's someone securing money somewhere and then they're saying that you're paying it off by you paying them. That's really it. They hold the money that you're paying and they only charge you a little bit of interest in doing so. So the loan funds are locked in a deposit account somewhere held as collateral to secure this credit builder loan. You make monthly payments of principal and interest, and the principal is returned to you. So you do get a majority of your money back. When your account is closed, the interest is how they actually earn money to provide this service. So you're really paying them the interest per month. So I'm going to break it down just so you have an idea, because it seems like it's more costly than what it is, but you can kind of use it like a savings account. It just depends on how you look at it. So let's kind of break this down. Now, let's say you had a $5,000 Magnum standard credit builder loan. Now, it's going to be $5,000. You're going to pay $60 monthly, but you're going to pay that with a 7.86% interest rate. Now, the length of credit history built is up to 120 months. That is a very, very long time. If you guys don't know, 35% of your credit score is on-time payments. That means this particular loan will be there for the long haul. It's going to provide you with a very long-term payment loan, which is great. I mean, that's usually what you want. Will anyone ever actually use this up to 120 months? You really shouldn't, but you do have the option of doing so. They even compare it to the self extra large builder loan, which is $3,076. The monthly payment is $150, and the APR is 15.88% for up to 2 years. That's really, really bad. That's why I've never talked about self, because it's just not that good. Now, the Magnum XL 15K is $15,000. It's $175 per month at 7.15% for up to 120 months. I still don't like the idea of paying an interest rate on a credit builder loan. It seems crazy, but when you think about it, the interest rate is actually what you're paying for the service. And I'll kind of break that down for you in a second. But again, they're comparing it to the self extra large credit builder loan, and it's just like it's half the interest rate. If you were going to choose between self and this, obviously this would be a much better option for you. Now, this is a credit strong table, just kind of showing you the breakdown of how much this loan will actually cost you. So if you were looking at the Magnum XL 30K, the original balance being $30,000. And again, the point of this is to show that you can handle large credit lines so that you can get the unsecured amount from somebody else by showing that you can handle it with this secured one. That's the purpose really of this product. That's really it. All right. So you have that one-time administrative fee of $25. If you were doing the maximum, the biggest one, it's this 30K one. It's $350 a month with the annual percentage rate of 7.13%. Now, right here on this table, they're showing you that in month one, you're going to pay $350. They recommend that you pay an extra $350, which would be a total payment of $700. You're going to be paying $177.71 in interest just from doing this. Now, they call this the principal savings, which is $522.30. They're calling it the principal savings because technically if you pay them $700, then this is what they're going to give you back if you were to cancel. So it actually would have cost you $177.71 just for you to maintain this. So essentially what you're looking at paying for this is $177 or $178 roughly the first month, and then every month it would be going down. But I mean, in the first year, I would say that you're probably paying an average of right around like $150 a month for this particular product. You can cancel this at any point in time. So if you've paid this down for 12 months and you've paid it down to $23,524.17, it may be good. I'll give you an example. I have an auto loan that I'm paying right now. The auto loan was $30,000. I've been paying on this auto loan for roughly around 6 months. I've actually paid ahead on it. The moment that I actually pay the auto loan down around 13%, because it's only 36 months, it's 3 years, right? I'm paying it off fairly quickly every single month. It's like less than $25,000 on the loan right now. My credit score, which was not moving that much, and it was in the 700 range, it was around 760 for like a long time, like 758. And this is my experience score. Now it's around 775. So because I've been paying on this larger amount of a loan and I've been doing it at such a rapid pace, I'm getting the on-time payments, but it's showing I can handle large amounts of debt. My score increased by a lot for me. Like once you get to a high credit score, only so many things will actually help raise it. So for me, having this auto loan at $30,000, it took me from that 758, 760 range after 6 months to 775. By the time I get to maybe another year, I'm going to be probably at around like 810, right around that 815 range. And that's what's going to happen because I had such a large loan and I paid it for a certain amount of time. Now, let's be, realistic for 1 second. What do you think the difference in interest would be if I had a 780 credit score and I had an 800 credit score? The interest rate really doesn't change that much. So for someone who has a pretty good credit score, this may not be the thing for you. If you have a pretty good credit score, you can just apply for something. You'll probably get approved, like an auto loan for $30,000. You pay on it. You don't want to pay it off because if you pay it off, then it's just going to be a paid off loan. Your credit score is contingent upon how actively you pay on debt, how actively you are paying on debt. Not how quickly you pay it off. It's how you handle it, right? You can do that with good credit. If your credit is a thin credit profile, this might be good for you. If you have like, let's say a 600 range score with no derogatory marks, no late payments, nothing like that, this might make sense. Now, what will it cost you after a year? After a year, it might cost you around like $2,000. That's what you would have paid, right? In interest, it'll cost you around that. Depending on if that's worth it to you, then it might make sense. But if it's not, then it may not be worth doing. I'm going to give you one more example of a FICO calculator, and I just want you to understand, if you were to use this and it was to help increase your score, how much money you could potentially save in interest when everything's said and done. So right now we're on the My FICO website. This is the loans saving calculator. This calculator is supposed to show you how much money you save in interest depending on what your credit score is, right? Look at this. From a 720 to a 850 credit score, if you were looking at, let's say, a new auto loan, and trust me, these rates are really high. Like if you're looking at a credit union, then this seems crazy, right? If you go to like one of my cars I got with Navy Federal, interest rate is like 4.09%, which is good right now. The other loan I got was directly from Toyota. It's like 8%, 8 point something percent with a great 750 range credit score, mind you. Okay, so getting a 7.123% interest rate is not that crazy right now. Now, I took the Toyota rate because they had incentives that actually got me money off of the car, saved me almost $5,000. So in the next 90 days, I plan to do a refi with Navy Federal, and then I'm just going to drop it down to like the 4.09%. I got my incentives, which actually saved me money off of the car, plus the interest. So when I did the math in the end, I'm really paying like a 2% interest rate by the, taking what they gave me with the bonuses for financing with them. So just a little, little trick. I might make a whole video on that trick. But anyway, for this one, if you had a 720 to 850 credit score, you might get a 7.123% interest rate. Again, this is subject to change. This is just a calculator I pulled up. You might have a $840 payment on a 48-month new auto loan. That's $35,000. Now, the total interest that you would have paid with the highest range of credit would be $5,326. Now, let's think about this for 1 second. If you were to use a Magnum XL loan, and let's say that your credit score was at 620 range, you're going to pay $10,395 in interest for this new car. Now, if I was someone who had maybe an old car that I was going to use for a down payment, maybe the car is paid off, I'm in a situation where I don't need this new car right now, but I am looking to get one maybe in the next year. Okay, cool. If I was smart, really trying to think about, crunching these numbers, I would maybe use something like the Magnum XL loan. Maybe it gets me from the 620 range over to the 720 range, maybe after a year, right? If it did get me there, my total interest, if I would have just gotten the car 1 year prior, would be $10,395. Here, it's going to be $5,326. If the Magnum loan cost me $2,000 and I save $5,000, ultimately, when everything's said and done, I save $3,000. right? I saved 3,000 because I'm saving 5,000 with the better credit score right here. But I had to spend $2,000 with that Magnum XL loan in order to get my score up to that point. So the difference will be $3,000, but it did save me money. Now, this is how I look at everything. I look at how much it costs to borrow. I don't just look at what the monthly payment is. I like to look at whatever the total amount is. How much does it cost me to borrow it? And if I had to spend some money on my way to get there, then it may or may not, make sense. It just depends. But this is just an example of giving you some things to think about. And to close this video, I'm finally going to give you my personal opinion on this particular trade line. Now, in my personal opinion, should you get this trade line in order to boost your credit score? Well, this is my personal experience and this is just my opinion. So if you are rebuilding your credit, meaning you have collections, you have charge-offs, you have late payments, no. If you do, I don't think this is for you. I don't think this is a good product in order for you to actually build your credit score. There are much cheaper alternatives that will give you the same result. Now, I used Magnum Credit Strong for about 7 months. I paid 80% of the actual loan off up front. I basically treated this like a pledge loan, essentially, to save myself on the interest. So it was slated for 120 months. That's 10 years. But again, I paid 80% of it. I had very low utilization on my credit cards and my score had risen about an average of 43 points. Now, I closed the Credit Strong account, but before I did, I got a real loan with the credit union first, okay? I closed the account before I finished it because that 43 point increase was just what I needed to get into that 700 range, right? And that gave me a great rate on my new loan. So because I was able to strategically use this in order to get a better rate, it made sense for me. I treated it just like a pledge loan from Navy Federal. I paid most of it up front, paid a little, because paying 80% of it did what to my interest rate? It reduced it. Now they do hold your money, but I know I'm getting it all back. So I didn't have to pay 170, all that money in interest. I paid a very, very small interest because of how much I paid up front, and it did a lot for my credit score. That gave me a better rate on a new loan, and I just used them essentially just for that better rate. Now, when you close the account before finishing, you get all your money back, and whatever history that you built stays on your credit report for 10 years. So negative information, it typically falls off your credit report in 7 years after the original date of delinquency, whereas closed accounts in good standing usually fall off your report after 10 years. And I wanted that good account reporting. So closing that account, it'll still show up as reported and as paid. So in closing, this can be worth it if you're using it strategically and if you know what you're doing. Is it necessary to rebuild your credit? No, I do not recommend using it for that. But if you're someone who has a fair credit score, you have a decent amount of money, and you have a thin credit profile, again, you have no derogatory marks. Yes, this thing can very much help you when it comes to getting lower interest rates for auto loans, and when it comes to getting maybe even higher credit card limits, business credit card limits, and it can help you get higher personal loans. Because I can tell you with certainty that when underwriters are looking at approving you for a loan, they're going to look at how much you've handled in the past. So if you've never handled a $30,000 loan, it's very unlikely that you're going to get a $30,000 loan from that credit union or that bank. You need to have something that can show that. So if you had a problem getting let's say a Navy Federal personal loan and you're wondering why, well, look at the other personal loans on your credit and then look at your debt to income ratio. That would give you a good indication of why you can't get approved. Now, there are other ones that are a little bit easier to get, like we talked about the Lightstream one, but it's easier because the Lightstream one actually is having you do the application as an auto loan, even though it reports as a personal loan. So there's like a little trick there and why that's easier to get, because auto loans are secured by collateral. There's something that they can come take from you to get some of the value back. Unsecured, there's nothing that they can do. They'd have to either sue you and then garnish your wages, but there would be nothing that they can take away from you to recoup. So that's the reason why personal loans are very hard to get approved for, even with good credit. You have to have a thick credit profile in order for them to want to approve you for these types of loans, or you'll get approved for a very small amount. They'll only really approve you for what they feel like you can handle. Okay. So with that being said, this is my personal opinion of this. I would say as long as you have a strategic plan in place in order to make this work, you are good. If you were just trying to rebuild your credit, maybe hold off on this. Maybe look at this later down the line after you've taken all of the derogatory information off of your credit report. And now the thing that you're looking to do is thicken up your profile to get higher approvals. That's when I would recommend this. Thank you guys so much for watching this video. I really do hope that you got a lot of value. This is something that I did not want to make a video about. However, after a one-on-one coaching, someone did have questions about it. So I thought it would only be fair that I give my actual opinion on that and my own personal experience of this product. If you've used it before, please let me know what your experience with this was. Did you like it? Do you feel like after watching this video that you're more informed about it, so you kind of understand how it works, whereas maybe in the past you didn't quite get it, so it didn't make sense? It seemed like it was very costly. I really want to know exactly how you felt about it in the end. And if you are currently still using this at this time, yeah, definitely give your personal feedback on this. And would you recommend it? Did it help you get higher loans? Did it help you get better interest rates? Did it really improve the things that you were looking to improve upon? I would love to hear that and your experience. So once again, guys, thank you so much for watching, and you have a wonderful day. Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Today, we're taking a look at another credit strong product called Revolv. If you're looking to build or rebuild your credit score, you may have come across Revolv by Credit Strong, and it's an innovative credit builder account that has gained attention for its unique approach to helping people establish credit history. They offer a credit line up to $10,000 with no credit check. Let's do a deep dive into what Revolv has to offer and how it can potentially help you improve your credit score. So without further ado, let's get right into the video. Let's first start by discussing what Revolv by Credit Strong actually is. Revolv is a credit builder account that's offered by Credit Strong, a division of Austin Capital Bank, and unlike traditional credit cards, Revolv combines a savings account with a credit building loan to help you establish or improve your credit history while you simultaneously build a savings. So when you open a Revolv account, Credit Strong will report your monthly payments to all three major credit bureaus, Experian, TransUnion, and Equifax. This setup helps ensure responsible credit building while encouraging good saving habits. Revolv is the best option for people looking to build credit in the least amount of time possible, and I'll explain why. Credit Strong installment accounts are cash secured installment loans for building your credit. When you open your Credit Strong account, the loan proceeds are originated by Austin Capital Bank and they're placed in a locked savings account, securing the loan. Each month, you can make payments that are actively reported, and it helps you build payment history that accounts for 35% of your overall credit score, as well as utilization, which makes up 30% of your FICO score, effectively impacting 65% of your overall score. And account holders can build $10,000 of a revolving credit line and see a 62-point increase on average with on-time payments, according to the Credit Strong website. Let's talk about how this credit line actually works. Credit Strong Revolv is a secured revolving line of credit designed to lower your utilization and build your credit while you save. When you open a Revolv account, Austin Capital Bank will extend you a secured revolving line of credit at 0% utilization. This will increase your overall total available credit and assist in lowering your total overall utilization. Now, they'll set an optimal payment plan for you at, again, 0% interest to maximize the benefits of the Revolv account. By adding usage and payment history to this line, it's going to help you establish payment history while also building your savings. And after you make 3 consecutive on-time payments, Credit Strong will increase your total line, allowing your Revolv account to reach its maximum credit limit. Recently, I did a video on the best secured credit cards. Still highly recommend that you watch that video, but I want to show you the difference between Credit Strong Revolv and a secured credit card. A secured credit card is often a great way to build your revolving credit. However, you're not guaranteed to be approved for a secured credit card. You can actually be denied because most of them require credit checks. Not to mention, you will need a cash deposit to open the account. It can be very hard to get a secured credit card, especially with a decent limit. Now, Revolv would be a solution to help you build your revolving credit without needing to put up a large down payment or deposit, because Revolv can only be spent on your savings account. So you can build your payment history by saving and not spending. So now that we understand how Credit Strong Revolv works, I do want to talk about the plans. Credit Strong offers 3 tiers of the Revolv credit line account. The 3 plans are the Revolv Basic, the Revolv Plus, and Revolv Pro. And they are priced at $99, $199, and $249 per year, respectively. These plans differ mainly in credit limits and credit monitoring features, as well as the size of savings and benefits that they offer. So let's start with the Revolv Basic. Once again, this is the base plan. It's $99 for the year, and this is the entry-level plan that's ideal for those who want to start small and build their credit affordably. The initial credit limit for this account is $1,000 of revolving credit. The maximum limit that you can build up to is $2,500. You'll receive credit limit increases in $150 increments after you make 3 on-time payments of $10 each. But remember, the payment that you make for the year is already paid up front. Any other payments that you make are going towards your savings. Now, this savings account will be with 0% APR. That means you're not paying interest and the funds are completely yours. You'll also receive credit monitoring and your FICO score monthly, which will help you track your credit building progress. This plan is best suited for credit beginners who are looking to establish credit history at a minimal cost while also forming a good savings habit at the same time. The Revolv Plus plan is once again $199 for the year. I would say this plan provides you the best value. You get a higher starting limit, a more robust credit monitoring feature, and you'll also receive an initial credit limit of $2,500 with a maximum credit limit of $5,000. Credit limit increases will happen in $250 increments after 3 on-time payments of $20 each. You'll receive the same savings benefits as the basic plan. 100% of payments will go into the savings at 0% APR, as well as credit monitoring your monthly FICO score, but you'll also receive FICO score factors and a quarterly Experian credit report. This plan is a step up for those who want more of a comprehensive insight into their credit health at a larger line, but it'll also help with your credit utilization. The Revolv Pro is $249 a year, and this one has the biggest impact on your credit score. This is the most premium for those who want the highest credit limits and full credit monitoring and identity protection. The initial credit limit is $5,000 of revolving credit line, and the maximum credit limit is $10,000. Credit limit increases will occur in $500 increments after you make 3 on-time payments of $25 each. All payments will go into a savings, once again, at 0% APR. As with all the other plans, you'll receive the credit monitoring monthly, your FICO score factors, and a monthly Experian credit report, as well as identity protection. And this will be a protection up to $1 million of theft insurance. This option is tailored for those who want the most powerful combination of credit building, financial insights, and of course, identity protection. So I went ahead and made a little diagram here of the key differences. That way it's laid out. So if you want to screenshot this, or maybe at this time you'd like to pause the video and kind of take a look at it, you can really see exactly what benefits that you're getting for what price. If you were to break these plans down into a monthly cost, you're actually only paying $8.20 $2.25 for the Revolv basic plan since it's $99 for the year. With the Revolv Plus, you're paying $16.58. And with the Revolv Pro, you're actually only paying $20.75 a month for you to have a $10,000 credit line. I would say that's pretty good when it's all said and done. But regardless of the plan that you choose, the following core benefits still apply. Unlike traditional credit builder loans that report installment payments, the Revolv plan is structured as a revolving line of credit, which can positively impact your credit mix and utilization ratio, two key factors that make up a majority of your credit score. Not to mention, it's the only credit builder that I can think of at this low cost that you can get at a $10,000 credit limit. You also have the on-time payment incentives. Each plan encourages you to make payments because those payments actually are savings for you. So you're actually paying this to build your credit while also simultaneously saving money. So it does build good payment habits by increasing your credit limit too with consecutive on-time payments. So it's so many good things that you're getting out of this. And 0% APR, there is no interest, and the FICO access. How many of you guys actually pay for FICO scores that you are, paying $30, $20 a month for? You actually get FICO score access already built in with this plan. So technically, if you were paying for a credit monitoring service right now, you could cancel that and get this instead. And then you could use this to also build your credit and save money all at the same time. Now, I do want to answer some of the most commonly asked questions. I did leave a link to the FAQ page for this particular product with Credit Strong in case you have any additional questions. Now, is Credit Strong available in your state? Credit Strong accounts are available in most states with the exception of Vermont and Wisconsin. So if you're in either of those states, unfortunately, you cannot get this product. What is required to open a Credit Strong account? Very simple requirements. You need to be at least 18 years old. You need to be a permanent U.S. resident with a physical U.S. address. You do need to have a valid social security number as well as an individual taxpayer identification number. You also need to have a checking account or debit card, a mobile phone number, and an email address. So again, very basic requirements. How long does it take for my credit builder account to appear on your credit report? Now, according to the website, Revolv accounts are reported within 15 days of successfully making your subscription payment. How do you close your Credit Strong account? You can close this account at any time with no early cancellation penalties by contacting Credit Strong via chat or by calling 833-850-0850. Once again, I'm going to leave a link to the FAQ page for Credit Strong Revolv in case you have any additional questions about how to make a payment or things like that. It'll all be on the website. There's a lot of details there. Highly recommend that you check that out. All right, so let's summarize everything that we talked about today. This Revolv product is unique because it merges the concept of a credit builder loan with the revolving nature of a credit card, but without the risk of overspending. You're not using a physical card, so just understand this is not a credit line that you can actually use. You can't swipe it at a store. Instead, you make small monthly payments that simulate responsible revolving credit usage while saving money. So if your goal is to build or rebuild your credit, avoid interest charges, see your credit score improve with responsible use, then the Revolv plan can be a strategic and disciplined way to do so. The only con I can really think about when it comes to this is that you can't use the credit line anywhere else. So, as opposed to any other credit builder, works just as well, but you get a higher credit line, which can potentially get you approved for other higher limit credit cards. Not to mention, if you were looking at business funding, banks like to see credit lines with relative limits. Now, this is a consumer account, so they don't like to see consumer accounts, but hey, if you had one on there and you were trying to rebuild your credit, it's at least nice to have one with a $10,000 credit line as opposed to $1,000 or $200 or even $500. So besides that, I can't really see any other cons with this. Thank you guys so much for watching this video. There's a link in the description if you do decide to sign up for the Credit Strong Revolv product. Let me know what you guys think about this. If you have any experience using this, drop that in the comments below. I would love to hear from you. And if you would like more credit builders like this, where you can get these large lines of credit to report, then let me know. I'd be more than happy to make some other videos like this in the future. Once again, thank you so much for watching, and you guys have a wonderful day. Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. If you're looking to increase your credit score, but you don't want to risk getting into debt, then this video might be for you. Today, we're going to discuss Credit Strong's Install and CS Max Credit and Savings Builder. This credit builder combines the benefits of a savings account with credit building, helping you establish a positive credit history while also putting money aside for the future. A combination of credit building and forced savings can be particularly valuable for those who are struggling with traditional credit products and want to establish a positive financial habit. So today, let's go over the pros and cons of this credit builder so you can decide if it's right for you and you can increase your credit score while also saving money. So without further ado, let's get right into the video. Before we jump into the specifics, here's a quick refresher on what Credit Strong actually is. Credit Strong is a division of Austin Capital Bank, and what they offer is credit builder installment and revolving accounts. Today, we're looking at a credit builder installment loan. Now, these loans, you don't get money up front. Instead, the funds are held in a locked savings account. You make monthly payments, and at the end of your loan term, you get the money back. But here's the important part. While you're making those payments, Credit Strong reports your payment activity to the three major credit bureaus, Experian, Equifax, and TransUnion. This helps you establish a solid payment history, which makes up 35% of your credit score. So in short, you're building credit while also saving money. When you make monthly payments, this will go towards the principal and towards interest. The principal builds your savings and is returned to you when the account is closed, and the interest is how Credit Strong earns money to provide the service. Install is an entry-level account for new credit builders offering options to build your credit while saving simultaneously. On the other hand, the CS Max is a program for people who are looking to have a better credit mix, specifically those who want to build larger credit lines. This account focuses more on credit over savings, but both of these credit builders are said to lead to a 45-point average increase on your credit score. Let's go over the plan and how it actually works. We'll start with Install. This is Credit Strong's standard credit builder of the two accounts, with lower monthly payments and shorter terms. Now, this account is great if you're looking to start small and you want to ease your way into credit building without a big monthly commitment. So keep in mind, all Install accounts have a $15 non-refundable administrative fee. The first plan has a $28 monthly payment over 48 months. That equates to around $1,344 over 4 years. And in return, Credit Strong reports $1,010 of the installment credit account to the credit bureaus. This is ideal if you want a very low monthly obligation while still gaining the benefit of an installment account on your credit file. It's not the fastest plan, but it's one of the most affordable and consistent ways to build history. The next option will bump you up to a $38 monthly payment for 36 months for a total of $1,368. That's 3 years of credit building, and by the end of it, Credit Strong reports a total of $1,100 in installment credit. This middle tier option is for people who want to be more aggressive but still don't want to be overcommitted. Then there's the $48 payment of 24 months for a total of $1,154. This is shorter, it's just 2 years, and it reports the installment credit of $1,000. So even though the reported credit amount is slightly less than the 36-month plan, the accelerated timeline helps you complete the cycle faster and gain access to your savings sooner. This plan works well for people who want results in a shorter time frame and are also okay with paying a little more per month. Across all three plans, the big win is the consistent reporting of on-time payments, which plays a key role in increasing your credit score. But in general, 48 months of on-time payment history will have a greater positive impact on your credit profile than 24 months. Now, if you're really trying to make a major impact on your credit profile, or you're preparing for something big like applying for a mortgage or let's say business funding, you might want to consider Credit Strong's CS Max plan. This second section in the screenshot shows the CS Max, which is designed for maximum credit building impact. All CS Max accounts have a $25 non-refundable administrative fee, and all CS Max plans have a 60-month term. That's 5 years of credit history, making them perfect for establishing a long, stable credit file. The first CS Max option has a $49 monthly payment, which comes out to $2,940, and it reports $2,500 in installment credit. That's more than double the highest credit amount on the Instal plan. So if you're aiming to impress lenders with a larger installment account on your credit file, then this makes a lot of sense. Next, there's the $99 monthly plan over 5 years. This comes out to $5,940. This plan reports $5,000 in installment credit, and this is a bold option, and it's ideal for someone who can afford the higher monthly commitment and wants to look serious to lenders who value high limit installment loans on your credit mix. And finally, there's a $199 a month for 60 months plan, which would come out to $11,940 in total. That's 5 years of reporting a $10,000 installment loan, and this plan is designed for people who want to maximize their credit profile for major finance goals. Think home buying or high limit business credit cards, or maybe like a large personal loan or something of that nature. If you're trying to look like a low risk borrower on paper, this is the type of installment history that can make underwriters take notice. And you should also note that Instal and CS Max accounts have no prepaid or early withdrawal penalties, so you can actually pay any amount over the minimum required monthly or cancel at any time for any reason with no penalties whatsoever. Here's what you can expect after you open this account. You'll immediately have access to Credit Strong's dashboard. When you open an account with Credit Strong, you're provided a free FICO 8 score for just being an account holder. Each month that the credit builder is open, you'll get this free FICO 8 score, and it's based on your Equifax credit data. You'll also gain access to a detailed score analysis and a monthly Equifax credit report. Additionally, Credit Strong offers 24/7 credit monitoring with alerts for any changes in your Equifax credit data. You'll receive your first FICO 8 score within 2 weeks of opening your account, and then you'll see the date for your next score update on a regular monthly basis. For Instal, CS Max, and even the Magnum one, which I've talked about in a previous video, if you're looking for something even higher to go up to 30K, I suggest that you watch that video. But your first monthly payment will be due for any of these plans 1 month after you open your account. When possible, accounts are set up on autopay once they're open. However, you can manually turn off autopay by going to the My Account Payments tab. Typically, your Credit Strong account will appear on your credit report within 30 to 60 days after you make your first payment. So realistically, if you're looking at this, it can take up to 90 days for this account to report. Now, Credit Strong provides your payment information to the 3 major credit bureaus, but it can take them some time to also process the information and add the account to your credit report. But each bureau individually controls when payment information will be processed and added to your credit report. So just have an idea of 60 to 90 days potentially for this to actually show up on your credit report. So while the Credit Strong Instal and CS Max accounts offer numerous benefits, it's essential to consider potential drawbacks. One consideration is the cost. Over the life of your loan, you may pay more in fees and interest than you would like with other credit building tools, such as like a secure credit card. Additionally, if you miss payments, these are reported to the credit bureaus, which can negatively impact your credit score. Therefore, it's crucial to ensure that you can make the commitment to each monthly payment before opening this account. I did create a table showing you the interest that you would pay for each Credit Strong plan based on the monthly payment, term length, and reported installment credit. And you can screenshot this, but I'm going to take you to the amortization table on the website to actually see the cost of interest broken down over a longer period of time. Currently, we are on creditstrong.com, and the product that we're looking at is, of course, the Instal and CS Max. If we scroll down, they actually will show you the same plans that we were just looking at, but we want to get more details about these plans. So if we're looking at the Instal, of course, $28 a month for 48 months, but if we extend this, you can actually see what each table is showing you. So technically, you have an annual percentage rate of 15.61%, which some people may look at that and say, wow, that is a lot that I'm paying for interest just for a secured installment loan. And it'll actually break down each month what you're paying, the interest that you're actually being charged, of course, the principal savings, which you will get back, and the credit builder loan balance. So this will give you a breakdown of exactly how much you're going to pay. And you can also download this. If you go to the full amortization table, you can download that as a PDF directly from the website. But looking at the Instal 38, as we can see, it's a 15.73% annual percentage rate. And you can also take a look and see the interest that's being shown here and how much you would actually pay. Same thing for the Instal 48, 15.51% for the APR on this secured installment loan. But what is interesting, once you get to the CS Max plan, it does start to go down a little bit. So if you're looking at the CS Max 49, it's actually a 6.99% annual percentage rate. And of course, then you can take a look and you can see all of the interest. There's also a pro tip here where it says if you make 2 times the payments or double the amount, it shows you how much money that you can actually save. And it's suggested on the website to potentially make 1 or 2 payments per month to speed up the process and to also save on interest if that's something you would like to do. But remember, the longer the installment, the more it actually impacts your credit score and actually helps. Now, the CS Max 99 is a 7.21% annual percentage rate. Once again, if you double up on payments, it actually kind of shows what you could potentially save. And then you could take a look and see that in the table breakdown. And then the last one that we're looking at is going to be 7.31%. That's the CS Max 199. And if you look at that, it shows you the breakdown, but it also shows you, hey, pro tip, if you were to pay 2x the amount, we could pay this in half the time, saving half the amount of interest. So technically, you may want to cut that APR in half because it would not cost you the exact same amount. While I'm on the website, I want to go over a few FAQs. You can have multiple Credit Strong accounts at the same time. You can actually have up to 2 installment loan accounts, and you can have 2 Revolv accounts, and you can also have 2 business accounts at the same time. And you can log into your customer portal with your existing login information and look for the Explore product section to see what's on the menu option. I talked about this before as well, but Credit Strong is not available in every single state. It's not available in Vermont and Wisconsin. And as an added note, for July 15th, 2021, it stated Credit Strong is the only deposit secure consumer credit building account for residents in New York that has been approved by the New York Department of Financial Services. But that was 2021. Things may have changed since then. In order for you to open this account, you will need to be at least 18 years old, a permanent U.S. resident with a physical U.S. address. You have to have a valid social security number or individual taxpayer identification number, a checking account or debit card, a mobile phone number, and an email address. And of course, this is no credit check for you to open this account. Also, if you can't make a payment, installment accounts require that you at least make the monthly minimum. And if you don't think that for whatever reason you just can't do it within 30 days of your due date, then they suggest that you close the account and just open it again at a later time. Revolving accounts, though, do not require a monthly payment. The one we're talking about is an installment. But if you were looking at something like the Revolv, when your account is current, you do not have a payment due, and you can set your monthly payments down to 0 if you want to take a break. So in this case, installments, if it doesn't work out, you can cancel, no harm, no foul. But if it's a revolving type of account, you are not required to make a payment. You can just set it to 0. If you were late on a payment, though, you are provided a 14-day grace period following your due date. However, if your payment is 15 days or more past due, you will be charged a late fee that's equal to 4% of the minimum monthly payment missed. The point of this really is to help you improve your credit, but if a loan payment is more than 30 days late, it will be reported, like I said before. So if you think that you, for whatever reason, cannot make the payment, just close the account. That's a much better option. Now, if you did need to close the account or contact Credit Strong for any reason, you can call them at 833-850-0850. You can also chat online. They're based in Austin, Texas again, so you'll be familiar with the central time frame. And if you need any help between 8 a.m. and 5 p.m. Central Time, they will be there. You can also leave a message through their widget, and they'll do their best to get back to you within 1 business day. Now, I will leave a link to the FAQ page in the description. So if you want to check any of this information or you have additional questions that could probably be answered right here that I didn't get to, please, I suggest clicking on that, coming back to this screen and reading any additional details. So now that we have a better understanding of the cost of this plan and the different things to expect once it's set up, who is this for? Well, if you're starting out with credit right now and you want to just dip your toes in credit building, then the install plan might be a good fit for you. It's a lower cost, easier to commit to, and still helps you create positive payment history. If you already have some credit and you just want to thicken up your credit profile, especially if you have little or no installment credit loans, then the CS Max might be a good option for you. The larger loan amounts and longer payment terms and more weight to your credit profile does help with your credit mix and helps you with your overall credit period. Keep in mind though, with any of these plans, the key is consistency. You want to make every single payment on time, every single month. That's what's really going to boost your credit score, because Credit Strong reports all of these to the 3 major credit bureaus, and it's going to help you build a comprehensive profile, but it's not going to happen all at one time or overnight. This will take some time. There are other products that kind of do the exact same thing, like for example, the Navy Federal Pledge Loan, if you're a member of Navy Federal, or there are also things like secure loans with banks and credit unions. Now, for whatever reason, if you can't get those open or you're not a member of, let's say, Navy Federal, you have other options like Ava or Brigade or Kikoff. But those loans usually only go for 24 months, these secured installment products. This one can actually go all the way out to 5 years. What's the real benefit of that? Well, if you were like me where you couldn't get a personal loan, they told me I didn't have high enough balances for my installment loans. If that's your situation, this might help you. Like if you were looking for a $10,000 personal loan, it kind of would help if you had something like the CS Max. You can actually show that you've handled a loan of that amount without actually having to be approved for it. It's very hard to get approved for that stuff if you've never had it, so this does kind of make it a little bit easier. Now, if you really wanted a larger loan, then you could look at getting something like the Magnum. Once again, I have a video going over all the details on that, but if you were looking for a larger loan like $30,000, then that one might be an option for you. And this really will help you, again, if your credit profile is thin and you want to get approved for one of those loans at a later point in time. You just have to keep in mind that it will not happen overnight. It does take time for this to actually be established. You don't have to pay the entire thing off. You can use it for, let's say, a year, and then maybe, let's say, go apply for a personal loan. If they see that you've paid off a majority of this and you decide to then apply, you might get approved and then you can cancel this. However, if you don't truly believe that you can keep up with the payments, or you just don't want to wait that long, then I don't suggest that you use this if time is a factor. But at some point, you will just have to wait and let your credit profile get established. No matter which way that you go, there's not a quick way to really put on active payment history that lasts for the long haul. So you'll just have to weigh the pros and cons and just see what makes the most sense for you. And then also what you're looking to do in the future. Sometimes it's good to plan ahead. So if you had an idea of something that you wanted to do in the next, let's say, even 2 to 5 years, I'm always thinking in the future, then maybe this may be a good option for you. Thank you guys so much for watching this video. I truly appreciate it. If you're interested in this product or you've used it before, drop that in the comments below. I would love to hear about your experience with Credit Strong. Personally, this one I have not used. I have used the Magnum at a point in time. I found some use for it, but not really overall what I was looking for. Eventually though, I was able to get an installment loan that did fit what I needed. And since then, I've been able to get approved for multiple personal loans for. Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. And today we're going to be talking about Ava Credit Builder and the instant $2,500 trade line that you could be approved for with no credit check. So back in 2023, as I was rebuilding my credit, I was searching for credit cards that I could be approved for, and I came across Ava. Now, I had no idea what this was. I read some reviews, but I wasn't quite sure. It was very new at the time, at least for me. And I've had this account for over 2 years, and I want to go through all the products that they offer and my personal review and experience using this Ava Credit Builder app. At any point in this video, if you'd like to sign up for Ava, there is a link in the description. You'll also get $5 when you sign up. So without further ado, let's get right into the video. Let's start by discussing who Ava actually is. Now, Ava is a credit building app that was designed to help you boost your credit score. Even if you don't have a credit history or your score is less than stellar, it offers a simple, user-friendly experience and is especially great for people who have struggled with establishing credit in the past. So in my personal situation, I was looking for a credit card that I can get approved for. At the time, I had a lot of charge-offs, so I was not getting approved for any credit cards. I also tried the secure card route. However, all of the secure card options, at least as far as my credit report was showing, it was a very low limits because I'd have to put up capital, my own cash, in order to actually fund this credit line. So when it came to Ava, having a credit line that would report $2,500 and help me build credit was very important for me. Now, Ava did actually help me build credit fast. 74% of Ava members see a credit score improvement in less than 7 days, and I'll go over that and exactly how that works. Ava offers two products that work differently, but they both do help you build credit as long as you're using them responsibly and you're managing your timely payments. Both accounts report to all three major bureaus, which is very important. And this is going to be TransUnion, Equifax, and Experian. And it reports it within the first week of you joining Ava. So you can possibly see the Ava trade line on your credit report within 1 week. The goal is to help you add credit history as soon as possible. Once again, 74% of people that use this saw improvements, including myself. Moreover, your on-time payments are reported within 24 hours. So that's going to help you increase your credit score a lot in a very short period of time. And this is an instant approval. So Ava does not check your credit score when you apply, and there's no credit score requirements. There are no interest charges as well. So there really is nothing to lose by you actually signing up for this product. The first product we're going over is the Ava Credit Builder Card. This, once again, has no credit check, no interest, no deposit like a secure card, and it has no annual fee. Now, the way that this card works is similar to any other credit card, but it has a built-in feature that is meant to help you spend responsibly and build credit history. So you'll have a credit limit that's reported. It's up to $2,500 and the ability to use your Ava Credit Builder card on more than 60 online merchants that are approved by Ava. Now, I did list some of those merchants here, and we'll go over that in a second. Now, this can help your on-time payment ratio, which is 35% of your credit score. It can also improve your credit card utilization, which is 30% of your overall credit score. Both your utilization and on-time payments can be reported within 24 hours to the credit bureaus, and that's how you're going to see a vast improvement in your credit score in a very short period of time. I set the Ava Credit Builder card as my primary payment method for most of my subscriptions like Netflix, Spotify, Hulu, Cox, and there are some other ones here that you could take a look at, but the Ava card would be charged for my subscriptions, and then I would pay them off by linking the Ava card to my bank account. I would pay for the subscriptions, help build my credit, automatically pay for those things with my bank account, and I never had any late payments or anything like that. So it was a very, very easy setup for me to use this and pay for things that I was, already going to pay for anyway, while also building credit. Now, Ava will not let you use the entire $2,500 that's reported. Instead, it caps your spend limit each month to keep your utilization low, which is optimal for maximizing your credit score. So for example, if the Ava Credit Builder card is $2,500, 5% of $2,500 would be $125. So Ava might give you a spend limit of, let's say, $125, and then you could use up to that amount in order to pay off all of your subscriptions. Now, the lower your utilization, the higher your credit score will be, but you need to be paying for something. No activity does not help your credit score, because remember, a credit score is a report of how well you pay on time. You have to participate in paying off debt in order to build credit. If you don't, then you just won't generate a credit score, right? So you need to be paying off something, but the lower the amount that you're using as opposed to how much credit line you have available will maximize your credit score. Once again, 35% is on-time payments, 30% is utilization. So you need to have a credit card to be able to maximize on both of these. Now, to my knowledge, you'll only be able to access $25 when you first start using Ava Credit Builder card. That's 1%. Pretty much they put you in the perfect percentage to have the lowest utilization possible. That's going to help maximize your credit score in the very beginning. Now, as I used the card more and I saw that I was using another product, they would increase the amount that I can actually spend on the Ava card. I don't know what my maximum amount was, but I feel like it definitely got up to at least around $175, somewhere in that range. Now, the Ava card payment is due within 7 days after the Ava card is actually used. you'll need to at least have $100 linked to your bank account for automatic payments to go through. Otherwise, it will decline. And while there are no late fees or penalties for that, the late payments can be reported to the credit bureaus, which will hurt your credit score. And I've said this in past videos, if you had a perfect 850 credit score and you got one late payment, that could drop your score 100 points. So it's really, really important that you pay this on time, even though it's just a credit builder. It's the same as any other credit card. It doesn't matter what product that you have, an auto loan, installment loan, anything. If you don't pay it on time, the late payment still occurs and the same thing happens. So like I've said in many videos, credit building is a zero-sum game. You need to be perfect in order for your credit to be stellar, not one blemish. The cost of Ava is really straightforward. Ava charges a subscription fee of $6 per month when you sign up for the annual plan. So you could look at that as $6 a month or $72 for the entire year. Now, the month-to-month subscription fee is $9 or $108 per year. You can pretty much pick whichever one that you would like. I think for the ability to actually have a $2,500 trade line report to your credit, especially when you're in the rebuilding phase, $72 is not a big deal to just pay for the entire year. Or if you would rather be month to month, then it's only $9 and then that's just $108 for the entire year. Whichever way you prefer, it doesn't really matter. And Ava also has other products and services that you can use that are included with this same monthly fee. And then we're going to go over those products next. The Save and Build credit account is an additional product included with your Ava service fee. So you're already paying for this particular product when you pay for Ava. Now, the credit builder loan has no interest charges. There's no credit check. There's no late fees. It does require an existing bank account for payments so that you can set that up and you can actually save your payments. And it works like this. You pay or you set aside, however you want to look at it, between $25 and $100 per month. This loan is secured, so you will get all your money back after the term is over and you've made all the payments. These are monthly installments that go to Ava. They're placed in the Saving Builder account. This account doesn't earn interest, so unfortunately you won't be able to earn any additional money, but each payment is reported to the credit bureaus. After 12 months, you receive the full amount. It's released straight back to you, and it can be anywhere from $300 if you did $25 per month or $1,200 if you decided to do $100 for 12 months. Ava doesn't charge a finance fee. There is no APR for this service. So you're simply just committing to saving money that requires a monthly contribution and helps build your credit history. I think for that, it's a pretty straightforward thing, and there really is no reason why you shouldn't do it. However, just like any other form of credit, late payments can be reported to the credit bureaus, which can harm your credit score. Again, there's no late fee, but if you did not pay this on time, like anything else, it will report. Any other credit building loan will charge you APR or a financing fee to cover the service. But since Ava doesn't charge you a finance fee and you're already paying the monthly subscription of either $6 to $9, it feels like the Save and Build credit account is an additional product for the service fee that you already pay. I mean, technically it is. With every on-time payment, your credit is positively impacted and becomes good payment history, and in 24 hours, it gets reported. So if you have the Ava card and you have this account, I mean, instead of doing 12 on-time payments in a year, you'll stack 24. So it's just double. It can definitely help you. This account also helps with credit mix. The Save and Build credit account will be categorized as an installment loan. Credit mix is 10% of your overall score. So a good credit mix will demonstrate your ability to manage different types of debt. Now you're impacting 75% of your overall credit score, 35% for on-time payments and payment history, 30% for utilization, and 10% for your credit mix. This will help you save money and build your credit all at the same time. So I think it's a really good product. Again, very straightforward, very easy to use. Ava also has a rent reporting feature that allows you to report your rent payments to all 3 credit bureaus. However, this is only available to some users at this time. When I log on to my Ava app, I'm actually able to see it and it looks just like this. You won't find this listed on their website either, but it's expected that this will be available to all users this year in 2025. So you could set this up very easily if the option is available to you. You connect your bank where you pay your rent from using Plaid. You then follow the instructions to register your rent details, and then Ava will report your monthly rent payments to all three bureaus, which helps you build credit and improve your history. So now you can have 36 accounts as well. In this one, I mean, if you have rent, this might look like an installment loan that could be $2,000 to $1,500, $3,000 a month, which once again, just continuously helps you build your credit score for things that you are already going to pay or to simply save money. So if you do have the option to use this, I think it's worth it. Once again, it's no additional cost. It's already included with your Ava subscription. So realistically, if you have the option, there are 3 accounts that you have in total to help build your credit score overall. Now, is Ava worth it? Technically, you can build your credit with any credit card, and for the most part, you can do it for free. But we do have to keep in mind who this product is geared towards. So for me right now, where I'm currently at, I actually still have my Ava credit card still reporting to my credit report simply because it has a lot of history. So when I go to get a mortgage loan, eventually that's what I plan on doing. I probably will stop using Ava sometime next year, maybe even this year. It just kind of depends. But traditional credit cards require you to have a credit check. You have to get approved. And even if you're looking for a secure card, you still have to give a deposit. Not to mention, a lot of times secure cards have annual fees. You'll also be subjected to higher APR. Now, if your goal is to build credit, just to build credit, like that's it. This is a much simpler and, to me, much better alternative. It puts you in position to always have perfect utilization. A $2,500 limit for someone who's rebuilding credit is pretty good. Most secure card options, a lot of people start with $500, things like that. And even if you got a secure card, like I got a secure card at the same time that I got Ava, I just use this and that secure card both in combination to just help build my credit score. Now, Ava reports to all 3 credit bureaus, and that's for all of their products. They do it on a weekly basis to ensure that your score sees improvement as quickly as possible. So with all that being said, if you were looking for something to get started while you were rebuilding your credit, I do believe this is a great product for you to use, whether it be the secured loan builder or whether it be the credit card or whether it be even rent reporting. All of these options are good. Only drawback is that if you have a late payment, they will report it. The only way that you can combat that is to set up automatic payments and make sure that it's at an account where you'll always have a balance. As long as you do that, you really can't fail. Like that's the only way for you to fail. But also with any credit card, if the same thing was to occur, same difference. It's going to report, it'll hurt your credit. So that's really the only risk to you. Other than that, I think for the price, it is worth it. Once you are able to actually get some unsecured credit cards and your credit is cleaned up, do I feel like you still need it? No. After that, you can really get rid of it. I would say the only difficult part is that you do build some history with this. It will be one of your older accounts, but it will still stay on your credit report for 7 years, even after you stop using it. So either way, like when it's all said and done, I think it is a great tool on your way to building credit when you can't get a secure card or you can't get an unsecured card, or if you don't have the means to do a secure card deposit. Any of those situations, yes, I do believe this is worth it. So currently I'm on the Ava website and they had some illustrations that I thought were just perfect to use as an example. And it says a good credit score makes a big difference. So this shows an example of a consolidation loan and how much more you have to pay when your credit is, maybe at 600 as opposed to being at 740. So there's someone named Derek who has a credit score of 600. His interest rate is 19.5%. In this example, Derek pays an additional $2,345 as opposed to Pam. Now, this is 6 months after using Ava. Pam improved her credit score to 740, and she got to save that because she had a lower interest rate. Now, of course, these illustrations aren't, real people, but like even this comparison right here is kind of like dramatic, like 19.5 to 4.5. Chances are you're not getting an interest rate like that. So it is an exaggeration, but hopefully you understand exactly what they're trying to actually, paint the picture for here. So an auto loan in this situation, Peter's at $650, and we talked about this even in other videos, but this car is $21,700. Now look at the difference. One person, Peter's going to pay $32,465 at 12%. And then this person, Mary, with a 720 credit score, is going to pay 4.25%. The difference that they're going to save where they're buying the exact same thing is $6,000 overall. Now, this one is actually very normal. This is a very normal comparison that you could draw that really can happen. This is very realistic. You might save $6,000 in the course of a 72-month term just by using something like Ava for a short period of time to help boost your credit score. Now, the last one is your mortgage. Now, your home loan for 30 months is $326,000. In this example, I'm going to be honest, there's a lot of scoring models where I don't think that they consider some of these fintech banks as weighted scores. Like, I don't know if it actually helps that much. So I can't say like feasibly this actually makes sense. For a consolidation loan, possibly. For an auto loan, possibly. For a home loan, I'm not quite sure. But if you look at this, it does say that for Joe's going to pay $3,850, and then comparatively, Sally would pay $2,326, and then that's going to be a difference of $26,000. Once again, this one is kind of a gross exaggeration. The auto loan is very realistic. The consolidation loan interest rate, 4.5%, is very unrealistic. You're not going to see loans this low, but the point that it's trying to illustrate is already, well said. The point is that if you are someone that, let's say, doesn't have any derogatory marks, you don't have any late payments, you're just trying to just build credit for the first time, like you're new to credit, or maybe it's been 7 years, all of your old debt has fallen off, and now you're in the process of trying to get approved for things, but you're finding that you're not. This might be the thing that will take you from a 600 credit score to like a 680, close to the low 700 range. Then that might put you in position to get a car at a lower interest rate, maybe the credit card that you're looking for, your auto loan at a lower interest rate, possibly can even help with your mortgage. That is a realistic possibility. It could help with that. So in those situations, it's like, what do you think that it's worth in the end? What do you think that it is worth? Is it worth $72 in a year or $108 in a year for you to potentially save this much money? And then, that all depends on your perspective and how you feel about this. Thank you guys so much for watching this video. If you found this information useful, please let me know in the comments. If you've used Ava before, share your experiences. I'm only going to recommend stuff that I personally used and it really did help me. So for me, it did help. Other people have other experiences. When I did the Ava Credit Builder loan, they automatically, I think, tried to sign me up for another one. And I had to contact them and tell them that I didn't want to do another one later on. I think that may have been the one thing that I really didn't like. Other than that, my experience has been really good overall. Give me your experience. Let me know in the comments below if you've used Ava. Did you like it? Did you enjoy it? Like, let me know exactly what this did for you. Or if you've never used it before, there's a link in the description that you can click on right now. If you sign up, you'll get $5 just for the sign up. So again, that link is in the description. Thank you so much for watching this video, and you guys have a wonderful day. Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Today, we're taking another look at Kikoff in 2025, and trust me, you'll want to stick around for this one. If your credit is sitting anywhere below 600, then this video is especially for you. A bump of 20, 30, or even 50 points could be the difference between getting approved for a new apartment, landing a low interest loan, or finally qualifying for that credit card that you've had your eye on. The most difficult part of building credit is actually getting your foot in the door. Think about it. Lenders don't want to give you credit unless you already have credit, and that cycle keeps a lot of people stuck. Normally, the quick fixes are either becoming an authorized user on someone else's card, which requires a lot of trust and isn't always an option, or putting down a deposit for a secured card. But what if neither of those work for you? That's exactly where Kikoff steps in. Kikoff makes it easy for people to build credit with affordable monthly plans, and the results speak for themselves. On average, customers starting with credit under 600 saw their credit rise by 25 points in their first month and up to 84 points in their first year with on-time payments. That's fast. Now, if you've been following my channel for a while, you might remember that earlier this year, I made a video covering some of the best credit building tools on the market, and Kikoff was on that list. But since then, some things have changed quite a bit, and Kikoff has rolled out several new products, updated features, and added more options that make it an even stronger choice for anyone looking to improve their credit profile. So in today's video, I'm going to break down exactly what Kikoff is offering in 2025, how it works, and what kind of results you can realistically expect. And by the end, you'll have a clear picture of whether this is the right move for you and how it compares to other credit building strategies. At any point in time, if you want to sign up for Kikoff, you'll find a link down in the description. Kikoff is giving anyone that signs up with this link 80% off for your first month. That's as low as $1 for your first month with this discount. Click the link in the description to get the offer, and without further ado, let's get right into the video. Kikoff is what's known as a financial technology or fintech company, but unlike many flashy startups chasing trends, Kikoff's entire mission is focused on one thing: helping people build their credit. For millions of Americans, a strong credit profile is the key to unlocking better financial opportunities, yet getting there isn't always easy. Kikoff was created to bridge that gap. Kikoff offers 3 plans that come packed with tools to help you build your credit and track your progress. Sign up takes minutes and you can cancel at any time. There's no credit checks, no hidden fees, and no interest. So whether you're starting from scratch, bouncing back from past mistakes, or just looking to build your credit, Kikoff positions itself as a low-cost, beginner-friendly path to improvement. Before we dive deeper into all of Kikoff's products and features, it's important to point out something that makes the entire experience incredibly simple. Kikoff is an app. Everything you need, whether it's signing up for your plan, tracking your payments, setting up your rent reporting, everything happens right inside of the Kikoff app. The beauty of this setup is that you don't have to juggle multiple websites, logins, or anything confusing to operate the platform. You can download the Kikoff app on both Apple and Android devices. For Apple devices, you can find it on the App Store, while for Android devices, you'll find this available on the Google Play Store. You'll have access to your credit monitoring tools and any other tools and products that come with your plan, like rent reporting and your debt relief options, all in one place. Kikoff has built the app to be as user-friendly as possible. The layout is straightforward, the navigation is clean, and they've designed it for people who may be brand new to credit building. Whether you're checking your balance, enabling auto pay, or reviewing your credit updates, it can all be done with just a couple of taps. This ease of use is one of Kikoff's strongest advantages. Credit building can feel overwhelming, but the app brings all the moving pieces together in a way that makes the process approachable. As we go through each of Kikoff's plans, basic, premium, and ultimate, just remember, everything we covered is easily accessible from the app itself. Kikoff has made things simple by offering 3 different plans in 2025. Basic, Premium, and Ultimate. Each plan comes with its own set of features, cost, and benefits, so you can choose the option that best fits where you're at in your financial journey. If you want a full breakdown of the plans and how they work, check out their How Kikoff Works page. Basic is the most affordable entry point at just $5 a month. With it, you get access to a $750 Kikoff trade line that's reported every single month to all 3 major credit bureaus. That's going to be Equifax, Experian, and TransUnion. The Kikoff trade line is used to finance the purchase of your monthly plan, not everyday items like gas or groceries. Each month, your balance and repayments are reported to all 3 major credit bureaus to help you build your credit safely. All key credit building factors. This means you're getting the most important parts of the equation, consistent positive reporting, without having to break the bank. On top of that, Basic also gives you tools to track your progress, such as Vantage Score monitoring and personalized credit insights. These features help you see the direct impact Kikoff is having on your credit profile and allows you to make smarter financial decisions moving forward. Next up is Kikoff Premium, which costs $20 per month. This plan steps things up, giving you access to up to a $2,500 Kikoff trade line. Again, this is reported to Equifax, Experian, and TransUnion, giving your credit profile even more weight. But what really makes the premium plan stand out is the addition of rent reporting and bill reporting. For many people, rent is the single largest bill that they pay every month, and in the past, it hasn't done anything to help your credit. With Premium, those payments can now be added to your credit file. Bill reporting allows users to report their phone, electricity, gas, and water payments to TransUnion starting in their first month after sign up, giving you credit for bills you're already paying. This feature alone can have a huge impact on strengthening your credit history. Finally, there's Kikoff Ultimate, priced at $35 per month. This is the most comprehensive package, which can give you access to a $3,500 Kikoff trade line and can provide the strongest level of reported credit activity of all three plans. Like the premium option, the ultimate plan also includes rent reporting and bill reporting, but it goes one step further by adding powerful protection features. You'll get $1 million in identity theft insurance, as well as personal data protection services. That means not only are you building your credit, but you're also safeguarding it against some of the biggest threats that people face today, like fraud and identity theft. No matter which plan you choose, basic, premium, or ultimate, you're getting a Kikoff trade line that reports to all three major credit bureaus, which is essential for building a well-rounded credit profile. One of the most frequently asked questions that I receive about Kikoff is, can I buy things like gas and groceries with this? And the answer is no. The Kikoff trade line is used to finance the purchase of your monthly plan, not everyday items like gas and groceries. Each month, your balance and repayments are reported to all three major credit bureaus to help you build credit safely. This helps you build payment history, lower your overall credit utilization, and grow your average account age, which again are all key credit building factors. This helps to make sure that you're focused on the most important credit building factor, on-time payments, helping you build consistent payment history. So while you can't fill your tank or pay for takeout with a Kikoff credit account, what you can do is steadily improve your credit profile in a safe, structured way that's hard to mess up. And for a lot of people starting their credit journey, that structure is exactly what makes Kikoff so valuable. I've personally been using Kikoff myself for almost 3 years now, so I can tell you the smartest and easiest way to use your account without stressing over the details. The secret is to enable autopay. And here's why. Consistent on-time payments can be the single most important credit building factor. Now, technically, you could log in each month, you can make your payment manually and keep track of the due date yourself, but let's be honest, life gets busy and forgetting even one can cost you. Kikoff does report late payments to the credit bureaus, and a late payment can drag your score down much faster than on-time payments can lift it up. That's the reason autopay is so useful. By enabling it, the entire process becomes set it and forget it. Your plan gets charged, the balance gets paid, and the positive history gets reported all automatically. No missed due dates, no stress, no surprises. If your main goal is simply to build your credit consistently, autopay makes things easier, and it's one of those rare times where being on autopilot is actually the best move that you can make. The next feature worth highlighting is Kikoff's rent reporting service, and this one can be a real game changer. So think about it. Rent is usually the largest bill that most people pay every single month, yet in most cases, those payments never make it onto your credit report. But with Kikoff's rent reporting, that changes everything. You can actually start building credit with your rent that you're already paying currently. If you've been paying rent consistently for the past 2 years, this feature can benefit you a lot. Here's the best part. Kikoff will report your future rent payments directly to Equifax, and they'll only report the on-time payments. That means you're rewarded for staying current without the risk of a late rent payment dragging your credit down through Kikoff's system. Rent reporting is only available for premium and ultimate plan users, but if you're already using one of those plans, there's no additional monthly fee. Now, if you want to go the extra mile, Kikoff also offers a back reporting feature. For a one-time fee of $50, you can have up to 24 months of your previous rent payments added to your credit file. That would add 2 full years of consistent housing payments that suddenly show up on your report. It can make a noticeable difference. Getting started is very simple. From your user dashboard, click on the rent reporting tile. You'll then be asked to provide a few basic details about your rental situation and your property. Then, link the bank account you use to pay your rent each month. From there, Kikoff automatically detects those rent payments and reports them as they're made. Keep in mind that only rent paid from your connected bank account is eligible, so you'll want to make sure you're paying directly from that account. For many renters, this is the first time they've ever been able to leverage their largest recurring expense to build credit. Over time, consistent reporting of your rent can strengthen your payment history, the single most important factor in your credit. And if you choose to back report those 24 months, it's like giving your credit profile a jump start overnight. Now let's go over a few common questions people usually have about Kikoff and how it works behind the scenes. Number one, how long does it take for Kikoff to show up on my credit report? When you first sign up for Kikoff, don't panic if you don't see it immediately on your credit report. It typically takes about 30 to 45 days for the account to appear. The exact timing depends on when in the month you enrolled. Kikoff submits payment data once per month, and then the credit bureaus themselves need time, sometimes up to 2 weeks, to review and upload that information. So if you sign up mid-month, expect a bit of a delay before the Kikoff trade line shows up. That's totally normal. And number two, when does Kikoff report account activity? Kikoff sends updates to the credit bureaus on the 1st of every month. From there, it's in the credit bureau's hands. Once they process the data, you'll generally see the report update between the 10th and the 15th of every month. Some people may see changes sooner, but this is usually the window. And finally, who do I think that Kikoff is for? Kikoff is designed for just about anyone who's serious about improving their credit. Whether you're starting completely from scratch with no credit history at all, or you're working on improving your current situation, Kikoff gives you a structured way to create positive credit activity that lenders want to see. It's especially valuable for people who feel stuck. Those who can't qualify for traditional credit cards, who don't have the funds to tie up for a large secured deposit, or just need a simple, low-cost entry point into credit building. Over time, the consistent reporting from Kikoff can help you strengthen your profile and open the doors to better financial opportunities, like lower interest rates, easier approvals, and higher credit limits. And again, right now, Kikoff is making things even easier to get started. If you sign up using the link in the description, you'll get 80% off your first month, and that means you can start building credit for as little as $1 in your first month with that discount. It doesn't get more affordable than that, and it's a simple way to start taking control of your financial future today. Once again, that sign up link is in the description, and there's a disclaimer here that I have on screen. I highly recommend that you read that before signing up. I want to thank you guys so much for watching this video. If you found this information helpful, please like and subscribe to the channel. I cover products like Kikoff fairly often on my channel, and I definitely want to make sure that you have all the options available to you to get to your financial future that you hope for. Also, if you sign up for Kikoff today, drop a comment that says Kikoff. I would love to see that to know how many people have signed up for this. Once again, thank you so much for watching this video, and you guys have a wonderful day. Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. If your credit score is low or your credit profile is thin, or if you're currently rebuilding your credit, then this video is definitely for you. A lot of people want to raise their credit score, but they don't want another hard inquiry or a denial, or to have another account that they have to manage every single month. So in this video, we're going to discuss 2 trade lines that can potentially help boost your credit score very quickly in 2026. Specifically, no credit check options that can help you strengthen your profile without applying for new debt. These accounts also only report positive payment history, and in some cases, they can also add more age to your credit profile, which is something that you only see with authorized user trade lines. But the goal is not just to add anything to your credit report. The goal is to add accounts that make your profile look stronger, cleaner, and more consistent over time. And one of the easiest ways to do this without a credit check is by getting credit from the bills you're already paying anyway. So without further ado, let's get right into the video. To build credit, you need credit, which can make it a frustrating task when you're just starting out or rebuilding and you're trying to add a mix of credit types to your credit profile. Lenders are typically less likely to approve someone for a loan if they have low credit scores or don't have a thick credit profile. And if you find yourself in this position, a credit builder account might be worth considering. Let's start with rent reporting through Ryezing because this is one of the most overlooked tools to build credit. Since rent is usually your biggest monthly expense, having it show up as a consistent on-time installment can give your credit file the boost of a long-standing, well-managed account. For your standard FICO scores, 35% of your overall credit score will be on-time payment, making this the largest factor impacting your score. The rental reporting from Ryezing includes up to 24 months of back reporting your previous payment history. Adding this type of account alone could drastically improve your credit. In fact, a recent TransUnion study showed that adding rent payments to your credit report increased your credit score by an average of 60 points, but the exact impact will depend on each individual. So if you have a thin credit profile, this can also be a good way to start building one. As you continue to pay your rent each month, additional positive history is added to your trade line monthly. With Ryezing, this will report to all 3 major credit bureaus, building your credit just like a mortgage payment would. And with newer credit scoring models, primarily Vantage 4.0 and FICO 10T, they now incorporate rental, utility, and telecom payment data to assess your credit worthiness. So this will be something that becomes standard in the future. All you need to do is connect your account directly from the Ryezing platform, and the rest is easily taken care of. Not to mention, only on-time payments get reported, so you don't have to stress about missed payments or late payments showing up on your credit report. You can start a trial for $1 at Ryezing.com. The link is down in the description. Next, let's discuss utility reporting. You can boost your credit score as well by reporting on-time payments for your gas, phone, electric bills, things like that, to all 3 major credit bureaus. Reporting these accounts can help demonstrate responsible credit history and increase your credit worthiness with access to greater financial opportunities, such as lower interest rates on loans and credit cards. So if Ryezing is helping someone report rent and eligible utilities, that may create multiple layers of positive reporting without any new applications, any hard inquiries, and without taking on debt that you didn't need in the first place. Once you're a Ryezing member, you simply link your bank accounts from the secure membership portal, you select which payments are for utilities, and they handle the reporting and confirm that the payments are reported on a monthly basis. And again, currently, Ryezing can help you report gas, electricity, water, phone, including mobile phones and landlines. Overall, I like these credit builder accounts more than Ava or Kikoff because they include access to your credit reports, the ability for you to dispute negative accounts directly on the site, and more importantly, the fact that you never receive negative account history. On top of that, you can back report accounts as well. That can really improve your credit report fast because you're not waiting to build a brand new account from the ground up. Instead, you're taking payment behavior that already exists and you're getting it reflected on your credit report. If your file is thin or missing positive trade lines, this can make a noticeable difference once the reporting shows up. But this would be true if your main issue is not major delinquencies right now, but simply a lack of current positive accounts. This kind of no credit check trade line strategy can be especially useful for a few different types of people. Like, I can see this being helpful when you're trying to position yourself for a bigger financial move, like maybe a Navy Federal credit card, or maybe you want an auto loan, or maybe you want to qualify for better interest rates, or you're trying to get mortgage ready, even more so now that mortgages are using Vantage 4.0. In all of those situations, adding positive account activity with history before applying can be a really smart move. There are other platforms that offer similar services, but what Ryezing brings to the conversation is a little bit different. Instead of just telling people to work on your credit, it actually gives you a practical approach. It turns bills you're already paying into possible credit building opportunities while also giving you the tools to dispute negative accounts, all in the same place. Now, just to be clear, trade lines can help, but they don't erase bad habits. If your credit cards are maxed out, if you're missing payments, if you have collections that are hitting your report, or if you're opening accounts that are shortening your average account age, then rent and utility reporting aren't going to fix those situations by themselves. These are tools that can strengthen a credit profile that's missing positive data, and they can work alongside a rebuilding strategy. But they work best when the rest of your habits are also moving in the same direction too. So if you're going to use a no credit check trade line strategy in 2026, don't forget to pair it with the basics. Make every payment on time, lower utilization, clean up obvious reporting errors, which you can do through the Ryezing app, and give the bureaus a cleaner, stronger story to read. This is how you get the best results. I want to thank you guys so much for watching this video. If you're looking for trade lines to boost your credit score fast in 2026 with no credit check, these are both very good options. Start thinking about reported behavior. Rent reporting can help turn one of your biggest monthly expenses into a visible positive trade line. Utility reporting can also help convert everyday bills like gas, electricity, water, and phone into additional reported payment history. And when a platform like Ryezing helps you make the process easier, you're no longer leaving those payments on the table with zero credit benefit. Because the goal is not just to boost your score fast, the goal is to build a profile that actually deserves better approvals. And that starts with making sure the credit bureaus can finally see the good habits you already have. Once again, thank you guys so much for watching this video, and you have a wonderful day. Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Last year, I created a video on the best credit builder loans, and today I want to give a full in-depth review of Kovo Credit Builder. Credit mix contributes to 10% of your overall FICO credit score, and this refers to the variety of accounts that you have, like credit cards, installment loans, auto loans, and even your mortgage. A good credit mix will demonstrate your ability to manage different types of credit responsibly. However, unsecured loans are one of the hardest credit products to qualify for, especially if you're rebuilding your credit or your credit profile is thin, and that's where Kovo comes in. So today we'll discuss the features, the pros, the cons, and who this will actually benefit. And if at any time during the video you decide that you want to sign up for Kovo, there will be a link down in the description below. So without further ado, let's get right into the video. Let's start by discussing who Kovo actually is. Kovo Inc. is a registered public benefit corporation that states their specific purpose is to create an environment where economic mobility is more prevalent and people have more power to influence their financial well-being, and this is done in 3 ways. They design products with a commitment to help you achieve your goals. They don't offer products that can lead to chronic debt or financial ruin, and they set their prices in a manner that's transparent without hidden fees or surprise charges. The term public benefit refers to having a positive effect on people, communities, or public interest other than the company itself. This is also one of the few credit building products that reports to 4 major credit bureaus: TransUnion, Equifax, Experian, and Innovis. Kovo also gives you access to your FICO score. They don't specify which one it is, but from what I gather, it's an average of all 3 scores. That's rare for most credit monitoring services, let alone a credit builder, which I think is a great perk. Most traditional credit builders that you see are in the form of a secured loan, meaning you deposit a certain amount of money, let's say $500, and a company, bank, or credit union will hold that money. They create a loan payment plan for you to pay off for a set term. Once the term is completed, you get the money back minus any fees or interest that you may have agreed to based on your terms. And Kovo's a little bit different. So next, we'll discuss exactly how this works. Kovo isn't your traditional credit building service. It's not a secured credit card. It's not a loan that you're getting from the bank. It's actually what's known as a retail installment loan. So instead of giving you a lump sum of money or a line of credit to spend freely, Kovo lets you finance a series of educational courses, life skills, entrepreneurship, productivity, and even Google Sheets tutorials. You agree to pay $10 per month for 24 months for access to these digital courses. Think of Kovo like buy now, pay later products like Affirm, Afterpay, Klarna. Signing up for Kovo gives you access to this library of interactive educational resources, which Kovo claims is worth $400. So you're essentially buying this library of content on a credit, which you pay back monthly in installments. So to sum it all up, you're essentially getting a $240 retail installment loan that's $10 per month for 24 months. And like I said earlier, this content can range from helpful to, let's say, aspirational. And I doubt most people are logging in to finish like a self-confidence module or master Excel pivot tables, things like that. So to be honest, most people are signing up for credit building, not the coursework. So you may not really benefit from those things. Eligible customers with 4 on-time payments will gain access to a single purpose credit line with a $500 limit to use at Kovo. The revolving credit account provides customers an additional way to build credit on top of their installment credit account. Now, when you pay down your revolving credit account in a timely manner, that's going to help you continue to build payment history. It keeps your utilization low and builds credit for a longer period of time. And this also reports to all three major credit bureaus, Experian, TransUnion, and Equifax. This also includes a high deductible 1 million ID fraud insurance policy with 24/7 ID resolution services. Kovo also provides an opportunity for you to earn some money back through their rewards programs. So whenever you apply for credit, among other things that Kovo offers on their website, it rewards you with gift cards that vary by state, and you can view before signing up for that service. The amount that you can earn comes out to 1% of the loan's value. So the maximum amount that you can earn depends on the type of loan. If it's a personal loan, then you can get $400 maximum, student loan $250 maximum, auto loan $150 maximum, and credit cards are a flat $75. Let's break down how this actually helps your credit score. As you may or may not know, there are 5 key factors that influence your credit. Payment history, which is 35%, amount owed or utilization, which is 30%, the length of credit history, which is 15%, new credit, which is 10%, and credit mix, which is also 10%. Kovo hits 3 of these 5 categories: payment history, new credit, and credit mix. So by paying your Kovo bill on time every month, you're feeding positive data to all the credit bureaus for 2 years. Once again, on-time payments is the biggest factor in regard to your FICO score. The more on-time payments that you have and that get reported, the better your score will be. There's also no credit check to get started. So if you have no credit or you're in the process of rebuilding, not being subjected to a hard inquiry is beneficial. And since installment loans are different from revolving credit like credit cards, it also helps diversify your credit mix, something that lenders like to see. So if your current profile is thin, meaning you don't have many accounts, adding a Kovo account can help it. It'll beef it up a little bit. And if you have bad credit, it can add some positive account history onto your report to offset some negative items over time. Kovo also has a return policy. So if you change your mind within the first 30 days, you can cancel and get your money back. That's not something that you see every day. You can also cancel Kovo after 30 days by paying it off, but I don't really recommend that you do that. The purpose of this is to help build your credit, and it helps build your credit by reporting on-time payments for a longer period of time. So paying it off faster kind of defeats the purpose. It won't really help you. Now, to initiate a refund, all you need to do is send an email to support@kovocredit.com. If you do that in the first 30 days, you will be able to get your refund. Now, this part is very important. Let's say that you forget to pay or your bank account is light one month. Kovo will give you a 30-day grace period to catch up. There are no late fees, just a reminder or two. But after 30 days, it's a different story. They're required to report late payments to the credit bureaus. A single 30-day late payment can tank your score by 60 to 100 points. I talk about this all the time. Credit is a zero-sum game. You need to make sure that you are essentially perfect when it comes to payment history. So here's my tip. Set up auto pay. Just let it draft. It's $10 a month. Forget about it. That way, your credit keeps improving without you having to think about it. Let's talk about who Kovo is actually for and who will get the most benefit out of this. I believe that this is ideal for people with no credit, thin credit profiles, if you're like a student, a young adult, people recovering from past credit mistakes, anyone with a thin credit profile who wants to improve their credit mix, and people who are denied by other credit products due to having a very low score. If that is you, then this could benefit you. Who this is not ideal for is people who already have several installments and revolving accounts that are reporting to their credit. Those who can't realistically afford to pay the $10 a month. This also isn't for people who expect a quick fix when it comes to credit building. This takes a lot of time. And if you already have good credit and you just want to add something on there, there's probably way better options for someone like you. I would not say that this is it, but if you're starting from zero or you're trying to get back on track, Kovo is an easy, low risk way to do that. So here are my final thoughts, and we'll also go over the pros and cons. So pros, no credit check. It reports to all 3 major credit bureaus plus Innovis. It's only $10 a month. There are no hidden fees. You build both installment and technically you can build revolving credit as well. There's auto pay, a 30-day return policy, cashback rewards on future offers, and you have identity theft protection that you can also get. The cons: this is a small size loan. It's a $240 installment with a $500 revolving line. The revolving credit can't be used outside of Kovo. It's not a quick fix. This does take time to realistically see results, and educational resources may not really appeal to everyone that is using them. Now, here are my final thoughts on this. I've used many credit builders in the past to help me get my credit score to where it is right now. And what I can say is, if you're someone with a thin credit profile, like you're just starting to establish credit right now, I think this can help you a lot. I think it'll be a great option to pair with another revolving line of credit or a secure credit card, and maybe keeping this for 2 years. And then after that, you should be able to qualify for some regular unsecured installment loans and some other products, especially if you don't have any late payments, you don't abuse credit, and you just use it properly. Now, if you're someone who is trying to repair your credit, while I do think that this is good, I think you need to taper your expectations. I'm just going to use myself as an example. I messed up my credit a few years back, and it took me about 24 months to repair it. I took about 1 year to let the accounts age because I had repaired my own credit before. So I knew it was a little bit easier when accounts had time to kind of get inaccuracies, and they had time to be sold to collection agencies, and those kind of things make it a little bit easier. So in the meantime, I did things like disputed personal information from secondary bureaus and stuff like that to kind of make the process easier. When I started, after about 1 year, 13 months or so, I was able to get everything removed. Of course, I had to actively stay on top of that. Even when my credit score was at a 700, I had a thin credit profile with a few credit builders, but that was it. It wasn't the worst thing in the world. My credit score was still high. I could qualify for some things, but a lot of big things, my credit profile was too thin. And your credit score is a report card of how well you pay debt. So you can have a high credit score with a couple of credit builders. However, you won't qualify for large lines of credit or high credit limits. Reason being, if anyone lending you money has never seen you handle large amounts of debt, why would they lend you large amounts of debt? So in turn, if you had a $240 installment credit builder loan, you're not going to get a $40,000 personal loan. It doesn't make sense, right? So that's why I'm saying taper your expectations, but everything has a purpose. If you're at that stage where you're just rebuilding, this is great for you. If you're thinking about a $40,000 loan when you're in the rebuilding phase, that doesn't make sense. Again, taper your expectations. This will do what it needs to do for the time that you have it. And then after you're done with it, you can move on to the next thing, which would be some unsecured lines of credit and some unsecured loans, maybe smaller, and you can work your way up to bigger amounts. So that would be my recommendation. And if you have a great credit score and you're looking for something to thicken up your credit profile, I would say that this is not it. If you don't have any derogatory marks, your credit score is high, you should look at getting something else that you actually need, like maybe a personal loan that you want to pay off with low interest and you have an idea of how you're going to use it and you can feasibly pay it back because you make the income to do so. Then go get that. But if you're not, if you're rebuilding, if you're new to credit, then this will definitely help you. All right, thank you guys so much for watching this video. Hopefully this will clarify any questions about Kovo and their installment credit builder loan. If you have any other questions, please drop them in the comments below. Again, if you're interested in this particular credit builder, link is in the description. Highly recommend that you try it. When you sign up, let me know that in the comments as well. And let me know of any other credit builder that you would like me to review next. Once again, thank you so much for watching, and you guys have a wonderful day.